Hey everybody, so prices are finally stabilizing here in Tenafly year to date. Let's take a look at what's going on in our market. I'm Stacy Esser with the Stacy Esser Group, and this is your monthly market real estate update. Let's dive into the numbers that matter. All right, so here we can see for pricing, average list price is kind of flat, right? Down maybe 1%. The average sold price is essentially flat year to date, The median sold price, however, is down about 2.7%. So there's no bubble. We're just seeing kind of what I think is a normalization, right? A stabilization of the pricing. What is not stable is the velocity or the units at play. And that is the story that I want to focus on with you all. All right, take a look at this. This is not a stabilizing market. This is a market that is showing less solds, which again is a rear view mirror look, right? Solds are things that already happened. And it's also showing less pendings, which means that we're going to continue to have less solds in the next 3 to 6 months. And we're showing less new listings, which means we're going to have less pendings and then less sold. So why is this happening and what does it mean for, let's just say, somebody looking to buy in Tenafly? And don't think about this as just people coming into Tenafly. Think about it like this. 65-70% of everybody going to sell their house is also a buyer. A lot of the houses that we sell in Tenafly, are sold to people who are already living here. So think about it like this. If a lot of houses are sold to people that are living here, typically we're seeing a lot of move-up buyers, right? So if we don't have people moving up, that means we don't get their houses to go on the market. So that means less people can come into the market. There are a lot of people that are renting here in Tenafly who want to buy a house and they're struggling because they can't get that next house. They can't get that next house because that next house homeowner is not selling to move into their next house. And that creates I'm not going to use the word a cluster, for the inventory and the velocity. Is it a function of demand? Yes, in some ways it is a function of demand. Look at this with me again. If you have less homes under contract and you have less homes sold, there's obviously less demand. There is an affordability issue, there is an inventory issue, and it is creating a recession in the units we have at play here. How much of that is related to the mortgage rates? So I want to show you what this looked like last year. Okay, so here, this is Mortgage News Daily, and you could see this is the October 10th, and you could see we're right about 6.32, and this is national. We can get you actually lower than that if you work with us, but 6.38. The same time last year, hear me out, this is what was going on. You were close to 6.75%. So you are already seeing a tremendous reduction in the interest rates from where people were in the same time last year. We're just not seeing that translate into shaking free any inventory. So why is that? Well, I think that people are still hesitant to give up their comfy mortgage rates. I think that people don't know where to go. And I think that it's very hard to make a decision on going someplace where it's going to cost you more money than it is in your current house. So why are people making those decisions? Well, if it's lifestyle that matters. If you're sick of, taking care of a house, if you feel like, it's more money than you need, if your house is getting older and it's just going to continue to demand more money for you to maintain it, these are all reasons why people are deciding to go ahead and sell. Average days on the market are slightly higher as well, and that's showing you a little bit of a pullback from those buyers. It's showing the buyers just saying, not so sure. You're also seeing more price reductions and more houses that are expiring. Again, sellers are not necessarily interested in selling unless they're getting the number they want. When that house does sell, it's selling at or very close to its list price. That is a very strong strategical number for you to understand when you go to price your own house or when you go to buy a house. These numbers change depending on the price point you're looking at. But for the most part, buyers are still thinking that houses are going to sell close to, if not at or above, what their list price is. Overall, what I think is really important to understand is that we are still sitting with not enough inventory. I don't think it's a function so much of demand. I think we just still have a lot of moving parts to this market, and people are trying to understand what the new normal looks like. I think we have to get through a few more months of sitting in the low sixes for the market to like see what normalization looks like. And we're going to keep watching those inventory levels and a lot of other economic factors going on. But if we do continue to see the mortgage numbers staying in the low sixes and rates do drop a little bit, the idea here is that inventory will loosen up and will create more movement in the market. So we'll see the demand picking back up. As always, I'm really happy to go over your specific house with you, give you tips on how to increase the value of your house, whether you're looking to stay or sell later. Either which way, just reach out to me. I'm happy to help you. I'm Stacy Esser, and I want you to stay healthy and stay happy. Please like and subscribe and share with your friends. Bye-bye.